John Piper with a weekend video clip, and it's Saturday the 18th of May. And starting with the Dow this morning, we'll look at the action since the peak back in October last year. So a clear correction here, A, B, C, followed by a clear 5 waves up, 1, 2, 3, 4, and then this rising wedge 5. Now that didn't make a new high, so there are basically two scenarios here in Elliott terms. One is it's actually all wave 1 of a much bigger advance, and that we're going to see once this correction is over, if it's a correction, so maybe it's an A, B, C correction. That would take us down maybe to the 50% level around 23.8 or thereabouts. Or perhaps the Fibonacci 61.8% level, a little bit higher up, 24 and 400. And then we see an incredible rally taking us into the stratosphere, and if it's a third wave, probably exceeding the sort of 5,000 points odd we saw here. Now that's one scenario, of something incredibly bullish scenario after the correction is over. Is that impossible? No, nothing's impossible. Markets will do what they want. It seems fairly unlikely, but we just don't know what the. I mean, if there's massive inflation, then the markets could do that, and I think we can't rule that out. Trump does want a positive market for his re-election in 2020, as I understand it. So he may do anything to try and achieve that, I suppose. So that's one possibility. It still calls for more downside first in an ABC fall. So let's have a look at the shorter-term action. All right, this is the hourly chart. So here's what I'm calling a fifth wave failure, but it could be wave 1, as I say, of a much bigger advance. I'm calling this as a 1, 2, 5 part 3 down to there, and a 4 and a 5. So that counts as an impulsive decline. It looks pretty impulsive anyway. And it's followed by a corrective form, not necessarily over, incidentally. It could be over. It's quite short in terms of time, but it's hit 50% in terms of price. So it's done all it needs to do in terms of price. The actual time period factor is a little bit reduced, but we are seeing volatile action, so that's not sort of out of court. Now a 1, 2 maybe, so this could be a third wave developing. But there are two key factors here. Firstly, this is impulsive, or looks pretty impulsive. And secondly, this is corrective. Now, when you've seen an impulsive move followed by a corrective move, you expect another impulse move. Okay. Now, it's possible we've got another leg up here. That's not impossible. We have to monitor what's going on here to judge whether that's the case or not. It is also possible that this could be, I may have got the count totally wrong here, and it's actually an A, B, C move. I'm trying to give you all the options here. I mean, Elliott, there are no techniques on the market which give you a totally 100% outcome. That's the first thing to realise about markets. You're dealing with uncertainty all the time. You're uncertain what might happen next. Right, going over the 30-minute chart. So here's the low. Here's the A, B, C. This looks like a 5, in fact. 1, 2, 3, regular 4. So that could be 1 of new action, but a very strong bounce back up again. This gets taken out, then obviously looking at the least a C wave, but I thought we'd seen lower prices first, and of course that starts accelerating, and that would be a sign that we're actually in the next impulse move. Traders might want to sell a break below that level there, around 256.10, or a retest of these highs around 2595. Now that covers the Dow. Right, the DAX has a very similar pattern to the Dow, except that we started in January. So the peak was seen in January, and it's a bigger decline, A, B, C, with a much smaller bounce back. So it's just taken out the 61.8% level. That's about it, really. So what's happening since that peak? On the DAX, it looks like we've seen an ABC decline. So that's different from the Dow. That could be, of course, wave A of a bigger ABC to come. There's also, well, this actually looks like an A, B, and a 1, 2, 3, 4, and a 5 to come. So again, there's a dichotomy there as well. See how this move here develops, really. And we're not getting huge clarity here. It's quite wild markets, which and all this news coming out, the market reaction, the market overreaction is it's quite challenging to try and track what's happening. But overall, I would suggest that we're going to go lower. The Dow's going to go lower, than the DAX will go lower as well. Right, FTSE peaked in May, so we have different markets back peaking January, May, and October last year. Equity markets, that is. A, B, C looks like a corrective decline. This looks like an impulsive 1, 2, 3, 4, 5. Now we're dithering around a bit. Let's have a look shorter. Right, on FTSE, the decline now counts best as an ABC given the strong rally we've seen. But this could be wave B with another leg still to come down. That remains my favourite count here. More downside, which will clarify the position. Well, looking at gold, we have we have nice clear 5 waves up here. Nice breakout here, but gold has now broken back into this retreating wedge formation, raising a few question marks. This could be a D. I mean, obviously it's not within this falling wedge pattern, but we could see an E wave still around the 1260 level. So as long as 1260 holds, it won't change my opinion overall. A break below 1260 would be of some concern. So I have to see how that develops at the moment, but it's very hard looking at the shorter term to count this rally as a 5. It is possible, it's quite easy in fact, to count the decline as an ABC, A, B, then a 5-part. 1, 2, 3, 4, 5. Of course, so far, we haven't seen the low necessarily. We've just seen a little blip up from 1274, 75. So we need more data really, but certainly this is raising question marks on the rally. As I say, as long as 1260 holds, it won't make any big difference. But I would have preferred gold to stay outside these trend lines. Right, finally, to return to a world where everything is as it ought to be in terms of the Elliott wave theory, we have a Bitcoin, of course, December low. We had a nice clear 5 waves up to mark that low at the time. 1, 2, 5-part 3 wave. 1, 2, 3, 4. Blow off 5th wave top. Now a simple correction. God knows why there's so much furore about this. I mean, people are calling it a major crash, or blah blah blah. Okay, there's some kind of fixing going on apparently, but which may or may not be the case. As far as Elliott's concerned, it's all exactly as it ought to be. 4th wave decline as expected, as we've been talking about for weeks. It's really it's hard to say when these things are going to come in, but I mean, people have been calling for this to start falling back for some weeks, well, certainly a week or so. Okay, it's now come in, fine. It looks like a 4th wave. What we need to see is a 5th wave rally to confirm the 5-wave pattern. It's all looking pretty positive. Infrastructure's going very well. It's some stuff you read actually in the sort of popular press or these various websites that send out these regular reports. I mean, its sole intention is to gain readership. So this is why they make these sort of fantastical claims to try and get people to actually read what they say. But I know, if this is a major crash, then well, I know nothing about major crashes, I guess. Anyway, it looks to me that we're going higher. Nice solid spike, for example, which is quite an important thing. This is a daily chart, of course. Let's have a look at the shorter term just to see how the spike looks on. Right, this is the hourly chart. So peak at 8.4, looks like an A, maybe a regular B, C, but no sign of an impulsive 5 there at all. So that's wave A, I would say, followed by an A, B, C, B wave. So now we've got another leg down, could be equal to this one. That was 8.4 to 6.6, 1,800 points, or dollars if you like. So it looks like a decline down to around 6.7 thereabouts, sorry, 5.7 thereabouts would be the kind of thing to expect to see the end of this fairly substantial correction. But as I say, that's what Elliott leads us to expect, and that would not phase us account at all. So my calculation around 5.7 at this level here. We have an A, B. I'm assuming B's over. It may not be over yet, so we could go a bit higher first. But if that is the B wave, then move down to around 5.7 would be the point at which C would equal A, and be a point at which we could start to rally. In fact, the 4th wave of lower degree is often the key support. So that's around 5,000. So Between 5 and 5.7 would be the kind of area for to see the fourth wave terminate. The golden cross is well in place still. That's the daily chart. So the 200 moving average has been crossed by the 50. So that's looking good. This little decline is really nothing so far. Okay, if it goes down to 5, I'm sure there'll be more screaming and wailing and talks of huge collapses and crashes, etc., etc. But that's what I expect to happen at this point in time. Anyway, that's all for today. I hope you found it interesting and useful. Back to the report on Tuesday morning for subscribers. If you're actually in crypto, I mean, it is the place to be for some cash, which you can afford to lose. I mean, this is a very speculative market. You can turn a fairly small sum into a fairly large sum just by hodling, holding on. And it's not too late. Move down to 5,000 would be a very good opportunity to get back in again, or even 6 or whatever it might be. But it's obviously it's a personal decision for everyone to make. But all the signs are there. This is the start of something quite important. And bye for now. Thanks for listening.